Hey, welcome back to the Yukon Project. Our goal, as always, is to give you the information you need so you can be confident in making decisions about your financial life. And today I'm going to tell you what kind of interest rate you can expect for an unsecured personal loan depending on what your credit score is. This is actually pretty timely. We tracked dozens and dozens of lenders and we noticed a lot of them changed their lowest interest rate within the last few months. When I talk about the interest rate, it probably is more accurate for me to say the APR. The reason for that is that the APR includes any unavoidable fees, the most common of which is the origination fee. So these are the APRs that you can expect, which in most cases will be slightly higher than just the interest rate. Also, I want to make it clear that these are the APRs for unsecured personal loans. If you were to secure the loan with collateral, you would likely get a lower interest rate. These are also averages. Loans with longer term lengths, like loans over 3 years, often have higher APRs. The actual APR that you are offered will depend on these factors as well as details in your financial life, not just your credit score. So, as always, you can only know for sure what you could qualify for when you actually apply. But these numbers should give you a pretty good idea of whether a lender is offering you a decent deal or whether you should keep shopping around. If you have an excellent credit score, say anything over 720, you should be able to expect an APR between 10% and 13%. This year, we have seen a few lenders drop their lowest rate to the 8% range. So if your financial situation is particularly strong and you apply to the best lender for you, it is possible that you could score a rate as low as 7.5%. But generally, you shouldn't count on it. If you have good credit or a credit score between 680 and 719, you should be able to expect an APR between 13% and 15%. That's a strong credit score, so the actual amount that the lender offers you will have more to do with your income and your debt to income ratio. But you shouldn't be constrained by your credit worthiness. Hey, if you're finding this information helpful, please like this video and subscribe to our channel. Your support helps us out, and we really appreciate it. If you have a fair credit score or a score between 620 and 680, this is where things get a lot more uncertain. If your situation is strong and your most recent credit history is good, you could get an unsecured loan rate between 17% and 24%. With fair credit, it's possible that the strength of your finances could be the deciding factor. And frustratingly, it's also possible that you would be at the mercy of macroeconomic conditions. When lenders are worried about the economy, they often tighten up their underwriting for people in this range. If you have poor credit or a credit score between 560 and 620, you are likely only going to get approved by alternative lending companies. Getting a loan with an APR of 36% or lower can only be done if you secure the loan with the title of your motor vehicle. Many unsecured personal loan lenders that approve people with poor credit will have APRs that could be as high as 60%, 100%, or even 150%. Of course, the higher the APR, the more cautious you should be about taking the loan. And if you do take it, make sure that you pay it back as quickly as you can. Credit scores below 560 are considered bad and suggest that the person is currently in financial hardship. They are struggling to meet their monthly obligations. Traditional lenders will not approve them. Alternative lenders or payday lenders or tribal lenders might be the only companies that would take a chance on them. And the interest rate that you would expect is punishing. You can expect interest rates between 200% and 700%. If you absolutely must take one of these loans, it is imperative that you pay it back within a few weeks. Taking any longer than that will mean paying 2 or 3 or even 4 times as much in interest as you borrowed. These are the APRs you can expect based on your credit score, but it doesn't matter if you have excellent credit or terrible credit. You should always shop around. Every lender has a different algorithm for who to approve, how much to offer, and at what interest rate. The only way to be sure you're getting the best deal in your circumstances is to apply to several lenders. At the Yukon Project, we've tried to make shopping around easy, because who wants to spend their days applying for loans? If you go to our lending marketplace page, you can apply to any one of our featured lenders. Behind the scenes, we will check your rate with up to 40 lenders automatically. Our partners use a soft credit check, so applying won't hurt your credit. We will show you all of your approved offers so you can feel confident that you're getting the best deal in your situation. Good luck. Make sure you're getting the best deal you can. After all, you don't get any brownie points for paying more than you have to. Don't forget to like and subscribe, and thanks for watching.